Ding, 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 ding. Hey guys, morning. Level 2 here. Alright, 7 minutes before the open. Let's do this. Let me see if we could get some actionable points in the market today. We're looking at both the ES and the CL just at the open. About 7 minutes away from the open, we have a working order sitting right here at 33.70 measured move, analytical chart, measured move, where we're looking at that fade. We're looking to fade that open and looking to buy probably Tesla settlement. So we're looking to fade the open here, look to buy Tesla settlement. Alright, so we're looking at that 52 level for the buys, 70 to 72 levels for the sell side. Market looks pretty strong on the open, so be careful of how you're fading. So that is the basic strategy. If you looked at the opening range and stuff, it looks to be good. Oil looks positive. I was asked that question. Probably need to do some research on the oil side there. So looking at fading that opening at 70 to 72 area. Let's identify that area. Come here. Right. So we have the identified area. Trying to keep the chart clean. 69 to 72. Kill zone. Looking to fade that opening there. Looking for that quick punch to the upside and a return for target ones. Right here at 63.5, which is close to be high. You see, looking at volume overnight, and we're looking at value area low for TP. So we're looking at the active value area to manage, where we can do second TPs. If we look closely, we may get 54, 55. So looking to just fade the opening move, the overnight move from the 70, 68 to 72 level, 69 to 72, sorry. Just looking for that quick punch and the reversion back to the downside. That's going to be a quick trade. That's why we have a 2 contract trade here. We are looking at two areas. We have a buy sitting here at 50.20 and a sell at 50.95. We have a single sell at 50.95. We're looking at pointer control, structure, everything here. So it's just a structure play. We're looking at trying to get into the market, know where exactly where our stops are. If the market does push to the upside, which is the expectation for a continuation of the push to the upside, we may be encountering some resistance in this area here. So just trade what you see in the market. So we're looking at getting buy side 50.20 with 2 contracts and looking to sell fade 50.95 on the sell side. If you have questions on it, share and comment. Well, you comment and I'll try to answer your question as best as possible. As far as I know, need to look to see if there's any major oil news. That is at oilprice.com. See if we got the Russians to agree to that oil cut. Right, so Tesla is showing positive this morning on the open. Got my 35 shares, so need to be greedy. Was looking at getting in so that had some good conversation with some of those guys. We just call them Puma bears on Tesla. Like to see them get ripped up into little pieces. So we'll be monitoring Tesla on the open. Yeah, 3 minutes away. Don't want to fade this 66. We want to fade that 68 to 72 area. 69 to 72 is the area we're looking to fade. So be careful how you fade. The market might be strong. Looking for the oil to push up to that 95 to 51 level. And then look to fade it with a single with 50 points on your stops. So let's see how the market opens. I want to see exactly what it does. Was trying to get into a 675, never came down. Lowest I missed by was like $12 or something. We're just looking at the technical point. I was looking at 650 to 675. Just didn't get there. And we treated like a coronavirus trade. Where's my dashboard? Right, dashboard looks good. So we're looking to fade quick bounces in the market. Let's look at the ES. Specialize on the ES. Put that open. You can see we trading. Let's go to our 15-minute chart. We trading away from value from yesterday, all-time highs. You know we are. You could get run over at any point in time with this type of trade. You can see where we close here. Volume value was pretty well normal for they got grinded out of a couple trades yesterday. We looking at the equal measured move at the 70 on the open, especially looking to get in the fade of 70 at 10 a.m. You can see we close away from value, away from value and point of control, and the move extended overnight. You can see how boxy this is, and we got looking for, there's a lot of price acceptance at the 63 area. So you're seeing a lot of price acceptance there. So you zoom in the actual trades, trying to keep this chart as clean as possible and execute the trade. We know what we're using as stop, 6.5 points as stop. If you're aggressive, be very careful on the aggression, looking for the gap fill if you're aggressive to the entry. I am looking at volume and stuff on this side. So again, we're looking for to fade at 51 area, which we delineated here. Push for the downside on oil. Alright, so we're expecting to see a lot of trade to be bouncing off here. Want to see market direction. Want to see that opening range, and if the opening range pops it at 70, which is where we want the market to be before we start shorting. And look at how much price acceptance we get in the market. Your first TP is always 1-to-1. I would just look at the market, look at value, look at what we're looking at. If you're going in aggressively and quick fade, and make sure your stops behind 72. So be very careful. You will see where overnight point of control is here. So we expected the profile to fill out, because this piece of the part of the profile from 52 to 66 is incomplete in our analysis, meaning that prices have been there. We haven't seen action there. So the logical play is for it not to remain naked throughout early in the morning. The logical play is to get a short, to come back down to fill that, and then look for what the market accepts. Indicate and see in the price acceptance in this area here. So 52 to 60, and if you go way back, you can see where we are. Right, there's a up $1. Right, how to buy that stuff. We know how to buy that stuff. Bullshit us. BS. Token heads, too late. My average entry is 288. I still had 35 shares remaining. Whatever CNBC shares do the opposite. The token heads, we like to see them operate. So all we want to do is see a little bit of price acceptance, push to the upside, 10 o'clock, look to fade. Fade to the close or the high. You can see why we have that secondaries at 58, and which is value low. If it does break, then we look at the market very closely. We don't want to be ran over like yesterday. You can see where the market is looking to accept. You can see where your value is coiling. Once you see value starting to coil like that, I mean you're having a little bit of price acceptance, which is what they kind of and so happens to be 62 is below 62.5, which was, if you look back, boom, 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 boom. I wonder why that number appears there. That is one deviation for yesterday. So that is implied. Might be a naughty morning or a push morning, so you never know what to expect in this market at all-time highs. The previous all-time high was, structure high was at that 53. You can see we just knotted there yesterday evening and then bounced out of the range. So the expectation is to return to this range here. At some point today. And then we'll probably act accordingly. 3350 might be our optimal entry to go a bit long. Let's see what's up with oil. You see the order flow, 3000 early, like the opening range high is right here. The opening range, so if you're looking at faded, yeah, use your 1 minute chart and see what the opening range was. If you get short, make sure you know your stops are. I don't want to be short in this market as yet. I want to see how the trade develops. We do have a single outside, but that's a trade that we have been sitting on as logical trade. Traded 63.5. Yeah, I think that was the entry on that. That's on the micro account, so we don't have a lot of risk on that. I don't want money traded. Right, you have confirmed delta. Right, so what you're gonna do is try to get in on the short aggressively. This is the way we look to do it. Sell limit of 1 contract. This will be a single trade, a live execution. Live executions at 63. Stop it. Right. So we have a live execution for the bearish side at 63. We want to see price acceptance inside and then short. So this is your actual setup here. You can see where your stops are. 63 to 64 is kill zone. Looking to join the shorts in the market at 63 to 64. See where your take profit is. 1-to-1 trade. Don't exceed more than 1-to-1 on this first 30-minute trade. You may be stopped out, so we're looking at the high to join the trade. Looking at push and then join the trade. Oh, just didn't get filled. A little bit slow on my execution. Want to see that delta fill out. So when you see price action delta like that, the expectation is to fill that gap. Right up to here, 50 to 52. Here you see the developing on this. This is the expectation. You want to see developing on this, so you wanted to get in right here at 63. Don't want to be lower than 63 to 64 entries. as we kill zone. I want to see if we can participate in this early push. Don't want any entry lower than that because of our risk portfolio, how we manage risk on the trade. So our tendency is to be bearish on the open here. Want to see price jump back here, then shift back to the downside, looking for a one-to-one single trade. Always measure your risk before you enter a trade. It'll be taking over my brain all the time to where my stops are. And this is what you're looking at. So John and I, we'll be speaking about open range. This is your 930 candle here. You can see where we entries on the second candle for the dip. You can see where the pop was, you can see where the inflection was. That is why we're looking at 63 to 64 as the entry. Right here as our identified level. Shapes. Nope. I want to be in the active right there. Know exactly where our stops are, know where the expectation is, where we're gonna get, looking to get filled. So having your bracket order set up prior to taking any trade is very important. Very, very important. So we have a plan, we are trying to execute the plan, trade what we see. So you're looking at 63 to 64 to join the bears. Aggressively a single contract. And we have, didn't put the buy here. We have a 2 contract buy on the oil at 50.20. So your range is 50.20 to 50.10. You're looking to be aggressive with the 2 contract buy on that side, looking for the dip, looking for the continuation, test the low, range 15, and then push back to the upside. As you can notice, it's a single contract, so leveraging based on how confident you are in the trade and what you're looking for and what your targets, what is your basic targets, what you're looking at. You can always move your targets based on price action. So basic target is 1-to-1. Based on the price action, we could shift our targets. We know what we range is maximum at 50, so we look at here as 53 to 55 as our targets, where we're looking to actually get offer to make sure that we could get more than a 1-to-1 if we do see the bearish price action coming to the market. So the entry is at 63,
order filled.
Got filled. Move my targets to 54. We know high is the overnight high, is pre-market high, and after market high is our stop point. We know we have 2 contracts sitting here at 70. I don't have it on the demo showing here yet, so you're looking at kill zone right here, 63, 64, and look for the continuation to fill into the market to return the 54 area, which was yesterday's high close. So you can see how small our actual range is in the market. So you can see once you have tight range is the difference between acceptance and non-acceptance of price. Doom doom doom. So selling all-time high is always a struggle, always a struggle. So you can see what we were looking at, 63 to 64 in this range. We got the dip, got the most of the market to fill. They have not reached that all-time high, which is at 57 to 58. Like we're looking closely at. We had it filled overnight. We're looking for that return fill in active market. Otherwise, we ran into bulls. Always trade what you see. Trade small, trade smart. Make sure that these figures with our inversion is correctly placed. I need to put in the snap. This to the snap. It has not been snapping. To get my exact number to the upside, what the range would be right there, 70 to 72s. In the expected range, we have 2 contracts sitting there. So we look in at joining the bears for the dip to the downside, looking for this to fill up to 58. This would be the cleanest fill we get on the short side to test our all-time high. If that is not possible today, that would be a lot of bulls in the market. We know exactly where our stops are. I'm not afraid to execute a trade early in the market. That is probability and trading. Obvious trading. Wait what it is. Let's see what's we up to. Right, let's see if we can get in this oil. Bam bam bam. So we're selling, yes, I'm buying oil. So we want to see if we can get fill on this oil at 50.20. Remember yesterday we sold 50.20. Today we look at the buys because we follow any price action, market moves. We're looking at the logical points. What we're looking at in the market. Always have that in mind of where you're looking to enter a trade. So you want to fade that, hold there, go into the market there. This is the aggressive. May get stopped out on this, but it would be a lot less points. I mean, stops at 69, sorry. Yeah, so you're looking at that break and your entry right that way again, stop. Bam bam bam, stops are located here. I mean, that would be the failure and where we actual entry to contract entry is. Let's see what the delta looks like. Delta is pretty weird, swinging all over the place. Yeah, but a lot more positive delta, but the price reaction isn't that positive. You can see. Wow, why the dogs? Neighbor dogs. Right, you can see 3,000 contracts on the delta on the sell side. So that's 3 and 15, like 4,500 contracts on the sell side, and then you have 4,000 on the buy side on delta. Now this is not cumulative delta. Doom doom doom. Very odd that we didn't get fill on that. We didn't get this market to come down to that area of seeing price acceptance. Where's my value? Right, value is right here. Showing value is this computer is wicked. Right, so I don't want to see it break to the upside right now. You want to see execution to push this market back. A lot of entanglement gonna happen here based on what we see in this value. It's really tight enough. So we'll hold this trade through and look at what's the price and price action at 10. We're looking at 63, 64 as your entry. Not too far off on the entry. trading the active side of the market. Always trade the active side of the market. Looking to see if we could get into that 50 30, I mean 50 20 to 50 10. Yeah, average entry is 50 15 1 5. 1 5 is your best possible entry. If you mentioned all well and good, we have an aggressive entry at the 50 20 and stops 30 points if you're looking at the 50 10 to 50 20 and singles. All well and good. You need the break of this minor structure here to get us true fills in this area. This fill area is right here. We're looking at you're looking at your London open at 50 as protection, so you need to be behind that London open. Or if you have questions, you could always type it in chat with the style of trading, how aggressive it could be, how aggressive it should not be. We're just looking for, we think the market is overbought in this state on the yes, away from value, away from volume. So you must always have an overview view of the market, and we're looking for the entries are very particular. So we know our major sell is at 70 to 72. That is our 2 contract. Me need to take it live because I don't have it on the demo here. We have 2 contracts sitting at 70 on the sell side. You can always bridge it and use 70 and 72 to give yourself a little more protection, a little bit less risk. That is your return to high there. 950. Yeah, that is decision point. You probably could flip those points off. So optimum entry is at 70. Right there. The other guy returned to high there. That's why we had our stops above right there at 69. So because using deviation as stop target and also major entry target, we're just looking for the return to downside here at that 57 to 58. Not to worry because we're in the active part of the market. You could get a pinch point, a real pinch point right there of that attitude. That's a VWAP pinch point you may be able to get into, but that would be very difficult for us to take because our risk to reward does not match that. We're looking at getting between that 50-20 to 50-10. Look for that bounce. Use 50 flat as your protection. Always look for structure to protect your minor structure, major structure closes. You can see where the market closed. Down here. You can see where the market closed right there. You could use your pit close also to get that. So you're looking for is coming to the area bounce. We're being aggressive. We have working over that set right here at the 20. We know that is an inflective point. We know how much points we could give up on that. We have 2 contracts looking to buy on oil. Yeah. Looking to follow progress of the market. No opening range. Right there, you can see that opening range there. Doji. If you see Doji, we look for structure and logical entries. If you look at entering the market, we advise if you're looking at 15 1.5 on the market might be your equivalent to perfect entry to execute the trade plan. Executing aggressively, if you're at it here and you're looking at stops, that's what will create issues. Right? That's issue number one, where you place your stops if you enter at it. So that's why we don't have a trade on right now at it. Now remember, all VWAP, the reason that is live is, you see, delta is something that you look at. Live VWAP and stuff, all that is lagging, the lagging entry, which is pretty tight here. So the next move in the market may be a push. We have spent 25 minutes already in the market, looking to see what's up in the market or down. If you fade the opening range, all well and good. If you want to lean on it, possible lean here, but we have our range play right there, and that's 70 to 72 for the majors. We're looking for minor execution right here from 63 to 57, 58. As the initial, and then move to the downside. You can see more or less price hasn't done anything for the last 25 minutes. Sharp, raise, sharp is the most logical. If we do get the push to the upside, we got a perfect entry for to log in a bigger position in. Don't want to be in too much of a big position and take too much risk and get run over. I haven't seen my construction guy game today. So this was right here. That's your market open right there. And you can see we tangling me in point of control. Tight. Very, very tight. Value area, active value area. And you can see what the overnight we came from way back at 49.25. So the expectation is for this to fill. If this does not fill today, that would mean yesterday's point of control will be very naked as a point of control. And that's like what we were talking about here. When we kicked off of 2 points of control, one was naked, next one was not. We had a VPOC right here from the previous week, and value, and push to the upside. Just because I wasn't expecting it, push to the upside to be that strong if it was coming. Volume was reasonable yesterday. When you look at volume in a couple of minutes, good forward. Volume FA, reasonable amount of volume here. In 3 minutes away from 10 o'clock. Yeah, price acceptance will be very important. Good people will be around selling stuff. Forget to put in some free music, man. Let me look at we got playlist, man. Alright, so looking at getting paid in that is a 10 a.m. execution right there. Alright, sold. So what's that for those guys? That's true there, pop come against us. It is still winning right now. Alright, looking at selling at 70.
Stop filled.
We got stopped out on the initial, which was, we didn't get pushed back to the downside, break to the upside. We're looking at the 70 to 72 as our major position. Let's see if we get filled. Oil just did not, and we missed by 7 pips. Would have put us too much in a bad place, but on the breakout.
If we do manage to get up there, that might be an interesting opportunity to look for an execution. Our overnight high was just put in what appears to be a triple top. It's not necessarily a strong top, but the inability to trade above the overnight high may be enough to send our longs that, again, are holding pretty many longs from overnight. This is weaker money. They're watching this carefully. If they don't think they're bringing in new business to the upside, they're going to push this market back towards, guess where? Settlement, which sits nicely at the overnight low, pretty much. 49.58 the overnight low. 49.57 is the settlement price. So a little bit of a fight going on here. If we can manage to close this gap, I think that might be enough to send our overnight long into a let's get out type of situation, push that market back towards settlement. Of course, anything can and will happen. Here's the E-mini S&Ps. Yes, another all-time high close, sitting at another new all-time high price here.
Yeah, I get straight.
Working its way towards that.
Bam, 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 bam. 10 a.m. execution. It's 10 a.m. execute right there. We just got in live at 69.75 on one right after a 2 contract. Reflect live. Right.
Order filled.
Hot. Did I get delayed push? Load up on 3 contracts yet now. Wait, if we get filled on the second. Looking for that push. Back down. Let's see where our stops are.
Order filled.
Got filled area on 3 contracts. What? Yeah, 3 contracts on the live. Both stops should be up to the top at 76.5. How much risk you have on think I executed a bit badly here on the demo. Yeah. Alright, make sure we have 1, 2, 3 different levels on the TP side. 63.5, 56. Secondaries could always be moved. Just want your primary to be in there. So you can see opening range play get flipped right over. Bang. And while it's struggling. So. Oh crap. Something, actually, I use the two hands to execute on my live demo. I got 69.75 on my live execution. Loaded 3 contracts on in total. And that is on my big account. So a lot of risk on both of the stops at 76.5. Looking at that range play to execute, we executed already at the 10 a.m. You can see the 10 a.m. candle right here. Got 69.75 right here at 3 minutes past 10. I want to fade that open. If we do get run over this morning, that would be 1 in, 1 out, and call a judge. Load up 3 contracts. The demo is showing 4 because I forgot to change the single. Oh, I just didn't react fast enough. Sorry. Eating snap. Damn it. I really need to be hearing that, so sorry. Right, in the range here. Pick up it there, pause while I have to look into. Maybe the comment right there. Alright. I'm gonna mute. Wow, why are you so? Get eat my snacks.
Activity at the nation's factories, whose output declined over the first half of 2019 and has been little changed on net since then. The February Monetary Policy Report discusses the recent weakness in manufacturing. Some of the uncertainties around trade have diminished recently, but risks to the outlook remain. In particular, we are closely monitoring the emergence of the coronavirus, which could lead to disruptions in China that spill over to the rest of the global economy. Inflation ran below the FOMC's symmetric 2% objective throughout 2019. Over the 12 months through December, overall inflation based on the price index for personal consumption expenditures was 1.6%.
Totally forgot Paul was speaking this
Core
morning.
inflation, which excludes
Sorry.
volatile food and energy prices, was also 1.6%.
I might be caught because did
Over
not
the next few months, we
pay
expect inflation to
attention
move
to that
up
speech.
closer to 2%, as unusually low readings from early 2019 drop out of the 12-month calculation. The nation
Wait, hey, in the
faces
background,
important
yes.
longer-run challenges.
Paul was speaking.
Labor force participation by individuals in their prime working years is
Might
at its
get thrown
highest
off here
rate in more than a decade.
because of that.
However, it remains lower
Forgot,
than in most
forgot.
other advanced economies, and there are troubling labor market disparities across racial and ethnic groups and across major
That's
areas of the
unfair.
country. In addition, although it is encouraging that productivity growth, the main engine for raising wages and living standards over the longer term, has moved up recently. Productivity gains have been subpar throughout this long economic expansion. Finding ways to boost labor force participation and productivity growth would benefit Americans and should remain a national priority. I will turn now to monetary policy. Over the second half of 2019, the FOMC shifted to a more accommodative stance of monetary policy to cushion the economy from weaker global growth and trade developments and to promote a faster return of inflation to our symmetric 2% objective. We lowered the federal funds target range at our July, September, and October meetings, bringing the current target range to 1.5 to 1.75%. At our subsequent meetings, with some uncertainties surrounding trade having diminished, and amid some signs that global growth may be stabilizing, the committee left the policy rate unchanged. The FOMC believes that the current stance of monetary policy will support continued economic growth, a strong labor market, and inflation returning to the committee's symmetric 2% objective. As long as incoming information about the economy remains broadly consistent with this outlook, the current stance of monetary policy will likely remain appropriate. Of course, policy is not on a preset course. If developments emerge that cause a material reassessment of our outlook, we would respond accordingly. Taking a longer view, there has been a decline over the past quarter century in the level of interest rates consistent with stable prices and the economy operating at its full potential. This low interest rate environment may limit the ability of central banks to reduce policy interest rates enough to support the economy during a downturn. With this concern in mind, we have been conducting a review of our monetary policy strategy, tools, and communication practices. Public engagement is at the heart of this effort. Through our Fed Listens events, we've been hearing from representatives of consumer, labor, business, community, and other groups. The February Monetary Policy Report shares some of what we've learned. The insights we've gained from these events have informed our framework discussions, as reported in the minutes of our meetings. We will share our conclusions when we finish the review, likely around the middle of this year. The current low interest rate environment also means that it would be important for fiscal policy to help support the economy if it weakens. Putting the federal budget on a sustainable path when the economy is strong would help ensure that policymakers have the space to use fiscal policy to assist in stabilizing the economy during a downturn. A more sustainable federal budget could also support the economy's growth over the long term. Finally, I will briefly review our planned technical operations to implement monetary policy. The February Monetary Policy Report provides details of our operations to date. Last October,
We
the
do see the big
FOMC
push
announced
there,
a plan
yeah.
to purchase Treasury bills and conduct repo operations. These actions have been successful in providing an ample supply of reserves to the banking system and effective control of the federal funds rate. As our bill purchases continue to build reserves toward levels that maintain ample conditions, we intend to gradually transition away from the active use of repo operations. Also, as reserves reach durably ample levels, we intend to slow our purchases to a pace
Totally
that will
forgot
allow
that.
our balance sheet to grow in line with trend demand for our liabilities. All of these technical measures support the efficient and effective implementation of monetary policy. They are not intended to represent a change in the stance of monetary policy. As always, we stand ready to adjust the
Good, now
details
half
of
an
our
hour.
technical operations as conditions warrant. Thank you. I look forward to
I'm going to close half
Thank you.
of my
I now recognize
trade
myself for 5
break-even.
minutes for questions. In December 2019, when the OCC and FDIC issued a notice of proposed rulemaking on comptroller outings proposal, the Federal Reserve did not join this proposal. FDIC board
Reduce
member
risk,
Martin
just reduce
Bloomberg
risk.
voted against comptroller outings proposal, describing it as, quote, a deeply misconceived proposal that would fundamentally undermine and weaken the Community Reinvestment Act, quote, unquote. And in remarks last month, Federal Reserve Board Governor Brainerd said that, quote, given that reforms to the CRA regulations are likely to set expectations for a few decades, it is more important to get the reforms done right than to do them quickly. That requires giving external stakeholders sufficient time and analysis to provide meaningful feedback on a range of options for modernizing the regulations, unquote. Chair Powell, Governor Brainerd also suggested in a speech last month that the Federal Reserve created a database of 6,000 public CRA evaluations, looking at how various CRA investments support low and moderate income communities. Has the Fed used this database to evaluate how bank activities would be assessed under the OCC's and the FDIC's proposal the CRA?
If I understood your question, it was whether we've used our database to evaluate their proposal.
Alright, the speech
That's
is
right.
over, so now we
I'm
could
not,
be any really short if you so
Totally sure we have. Maybe I can
Miss-
provide a little context, if that's appropriate.
That I thought the
if I
timing
may,
was
which is just that
for
I
next
do
hour,
agree
not
that
this
this
hour.
is a good time to update CRA in light of changing
That's
technology
because
and
I
demographics.
did
And
change
we agree
this
on
year.
on the goals. We put a lot of work into this. We tried hard to get on the
Didn't
same
see where the
page.
power
We weren't
is.
able to do that. We have some different ideas.
Does the Fed intend to do this assessment?
Excuse me?
Do you intend to do the assessment that I referenced regarding the database to evaluate bank activities
You know,
and how they would be assessed
So we-
under the OCC's and FDIC's proposal for CRA?
Well, so the real point of that database was for us to create our own set of metrics. We want to be very, very sure that what comes out of this is a proposal that from us
Could have gotten fried, yeah.
will
May
leave
still
all,
get fried.
major participants in CRA better off. And so we think it's important.
But no one will
each
go to
metric,
the
each
upper
change
side
that
band
we
which
make
be at
is grounded in data, and that was the
71.5,
purpose, was
72
to
the upper top.
help us develop
Yes, and a
our
reasonable
thinking
area
and our
for the
proposals, and that's
engines and
essentially
again
what
push
we've been
through.
using it for.
Maybe not a little more patient.
Given the magnitude of reform in CRA regulations,
Provide us
do
with
you
a
think
better
the
engine
comment
and lot
period
less
should be
risk.
extended to allow the public to weigh in on such an important undertaking?
It's really a decision for the OCC and the FOMC.
Well, I know it's a
I'm
decision of
loath
yours,
to
Mr. Powell, but
comment
what do
on
you
that.
think?
I think it's
go
it's
with
not
the
our
day.
role to comment on their proposal. We have our own work and our own ideas that
Time
we'd be
frame.
happy to share, but it's really up to them
And
to
then
make the decision.
So
Volatility,
are you completing your
standard
assessment? Are you
deviation,
continuing to
show the
look
value.
until you come to a final decision?
We are.
Or don't you think the public should have an
Before-
opportunity to have more time to do that also?
Like a
And they will
execution there.
when the time comes. I mean, I think
0.5
for the time
deviation
being,
is
what
at
we're doing
24
is
up,
we are looking forward to
and
reading
we
the
should be
comments
right there
on the proposal. I think we'll all learn quite a lot from those comments, and we'll be able to incorporate that thinking and whatever changes are made to the proposal. There may be substantial changes to the existing proposal coming out of the comments. So I think our view is that we want something that will leave everybody better off and will have broad support, and that's what we're going to be working on.
Well, as you may be aware, all of the Democrats on this committee urge regulators to provide a public comment period of at least 120 days on any major CRA reform instead of the 60 days the OCC and FDIC has provided. Community banks, state regulators, and community groups have called on these agencies to extend the comment period. And even though you said it is not your place to comment on whether or not that should be extended, I wish you would think about this. And I wish you would, as you're doing the assessment, and as you have said, it is important for the public to be able to comment, review what you are thinking, and if you change your mind, let us know about commenting on whether or not we should extend the comment period.
Yeah, she does deal with
You don't
it.
have to respond to that. Thank you very much. The gentleman from North Carolina, Ranking Member Mr. McHenry, is recognized for 5 minutes.
So it always is rich, right? So when somebody else has a negative comment about the Federal Reserve, that's bad. But when I, as a policymaker on the Hill, have a negative comment about the Fed, it's good, right?
And
So
here
it's
comes the
all about
politics of what it
the eye of the
is
beholder
to be
when
right
it
and
comes
left.
to
Oh,
the
Jesus
political
Christ.
debate here in Washington.
Tra-la-la-la-la.
Congress made a decision over 100 years ago to outsource monetary policy to the Federal Reserve. You're a construct of
Oh,
law,
Lord.
you're given independent operations, and you have a set term of office. And so the independence of the Fed for monetary policy is appropriate and is longstanding. Every president in the last 100 years has had some private criticism, and we found out at some point about that criticism, either through press reports at the time or later, or some biographer's work about the president. But here on the Hill, we can make negative comments about the Fed and attack the president for having negative comments about the Fed, right? So all this stuff is just rich politics. Let's get down to the essence of this. You are the biggest regulator in town when it comes to the financial world. I have concerns that I want to address that are regulatory in nature that I think impinge upon monetary policy.
Yeah,
Repo market, for instance. These operations you said are temporary in nature. Is that still true?
Yes, our expectation is that we will continue our bill purchases at least through into the second quarter, and continue repo operations at least through into April. And
Into April.
The sense of that is, though, that we're building up a level of reserves to a level that will mean that we don't have to be involved in open market operations on an ongoing basis.
What?
And that's going to take
Now they want to do
period
that?
of time. And as
Print
the
more
underlying
money,
level
print
of
more money,
reserves
man.
rises due to our bill purchases, the need for repo will decline, and sometime around the middle of the year we'll reach that level of ample reserves, and from that
They
point
just
forward,
printed
the
money.
balance sheet will grow at trend demand for our liabilities. We'll continue to expand with the
What?
economy and with
Are you doing a review on your capital requirements for financial institutions that should be participating in the repo market?
Well, I think we've reviewed supervisory and regulatory practices that may be affecting the flow of liquidity. Our main
You can
focus,
see
of
it.
course, is the federal
What's up
funds
with the
market
Delta?
and our
You're all the way
ability to
political of speech.
transmit our policy
Yeah, but guys,
decisions
loaded.
smoothly into the money markets through
This
the
is
federal funds rate.
accumulation here.
What happened in last
See, now
September,
that's
early September,
accumulation.
was that there was unusual tightness and volatility, and we attribute that to the fact that what appeared
That
to
is
be ample levels of
accumulation.
liquidity didn't flow where they might have. And so we're really doing two things. One, we're raising the underlying level of liquidity by raising reserves to a level that's higher than we had thought we needed. And that process, as I mentioned, will take till the middle of the year. We're
So
also
part of that is
reviewing-
a supervisory assessment as well, to make sure that the policy is being driven
Well, we have our own
in terms of
institution
the
here. We have four
institutions.
instead of
That's
two
right.
Okay.
And so we've been doing that
on the sell side here.
since September.
So
That was just
I raised this
the
in my opening
execution because I was
statement
clicking around.
about China. Now, you've spoken publicly about your assessment, your thinking as you see what is happening with China's response to the coronavirus. We wish them well. We have high hopes that they're going to be able to tackle this crisis, this public health crisis they're facing. But walk me through your thinking in assessing the situation in China now, in terms of the economics, and that potential spillover effect.
I'll just quickly start by saying again that we find the U.S. economy
Delta.
in a very good
No,
place,
Delta here.
performing well. We
Just
see
take a break out.
signs of global growth bottoming out. We see reduced trade policy uncertainty. Overall, the background, we see strong job creation, continued moderate growth, all of those things. All of this happens in the context of a good, strong U.S. economy. And into that picture comes the coronavirus. And so the question is, how do we think about that? Of course, first we observe the human tragedy, which is terrible to watch. The question for us really is, what will be the effects on the U.S. economy? Will they be persistent? Will they be material? That's really the question. I think we know there will be effects on China through some part of the first half of the year, and China's close neighbors and major trading partners in Europe as well as Asia. And we know that there will be very likely be some effects on the United States. I think it's just too early to say. We have to resist the temptation to speculate on this. And so we'll be watching that carefully again. And the question we'll be asking is, will these be persistent effects that could lead to a material reassessment of the outlook?
So a question of length of time, and whether or not this is a temporary disruption.
Yes.
Thank you.
The gentlewoman from New York, Ms. Velasquez, is recognized for 5 minutes.
Thank you, Chairwoman. Chairman Powell, I would like to follow up
enough
on
time.
Ms. Waters' question on CRA. What aspects of the proposed
Anyway,
changes
guys,
to the CRA
yeah, that's boring.
do you find most
I need to
trouble?
go and do some stuff. So we have
So,
87.
Again, What
As
I'd
the
like to do, if I
secondary
may,
entry here is our risk
not so
play
much comment
70
directly on
would
the
be
other,
inflective today,
proposal, but
very
talk about how
inflective.
we are looking
So
at
if you're
this.
holding your
And
trade
again,
through,
we think,
make sure
and I
hold
will
your trade
mention the
through.
areas in which
Okay.
we
True and
have
two
differences.
after the
Okay, I
speech.
hear that. I hear
So after
you
the speech,
and
you
I
might see the
respect
reaction
it,
to the
but I just would
downside.
like to
We're looking at getting out half our
ask you,
position
if
at break
the
even.
Fed is unable to reach an
And then
agreement
we're looking
with
to
the
get
OCC
back
and
to
the
pull back to
FDIC
60
on a
dollars
joint rule, do you
areas.
expect the Fed to issue its own proposal?
We haven't made a
And then
decision on that.
if you're holding on both of
Right
them, you're
now, our
looking for
focus is
back to low.
our focus has been on trying to get on the same page.
And on the
We
oil
haven't been able
side,
to
we
do
still
that.
have
Now our focus is going to be on learning from the process, and I think we'll learn a lot. I think
Are you meeting
this 20 to
regularly
30
with
area here
the
now, 30 looks like
OCC
it's
and
supportive, so you
FDIC
could probably
on
take the
this
30
issue?
return here
we
and say
did for
support
a
side.
long time. We're not currently meeting with them on this.
So would you agree
probably in a
with,
price trap here,
Governor
so I don't want to
Brainer's
have that even
comment
20
that it's
here
more
sitting
important
here
to get the rule right
and looking
than
to
to do
sell
it
the
quickly?
95s.
Yes, I mean, I think
Only
that's been
that
our
is it.
approach and will continue to be.
So anyhow guys,
Thank you.
it's no, I know,
Chairman
so
Powell, as you
been
know,
trading here for a
Representative
while.
Porter
And
and
just
I
need to grab on
have
that,
been
need to
concerned
take
by
out some
banks'
stuff.
growing reliance
I
on
just
cloud-based
missed the
service
execution
providers
based on
for the data storage
on the
needs.
speech missed
Does the
that
Fed
the speech
have
was
all
actually
the
happening.
access
So
authority it
we
needs,
holding on
or
to
are there any
1.5
contractual or legal
position here right now.
limitations
So we have
restricting the
I think
Fed's
also
ability to
looking to get
obtain
what
the
the half
data
right
held
at
by
69
third parties
and then
that
maybe
it
secondary
needs
to
to
come through.
properly understand and manage this growing
And so the
reliance?
speech might just kill
I
us,
think we
but
do
look
have
for
the
your
legal
range
authority
and your play.
that we need.
And your test up high
We are
and then
able
you
to
have
look
a sell at
into
87
third-party
to
service
the
providers,
upside, yeah.
and we're doing that more and more because of, as you mentioned, the prominence and size of these
Yeah, we're
growing
working out
importance
that
of these
media
cloud
sell here
service providers.
at 87.
Thank you. I yield back.
There's an inflective outside metal.
The gentlewoman
Straight
from
on the
Missouri,
market.
Ms.
So we
Wagner,
just
is
look at the close
recognized
up
for
here.
5 minutes.
I thank the chairwoman, and thank you for
speakers.
being here, Chairman
Okay, guys,
Powell.
that is
We're all very
for today.
interested since it just
Just
happened
make
on
sure if you're
January
holding your
29th, the
position,
spike,
take
the
small
repo
trades, small.
spike. I know the ranking member mentioned it. I know you're in the middle of your review and such, but could this, I have a little more specific question, could this repo market turmoil be symptomatic of deeper difficulties for the financial system?
I would really, it doesn't appear to be at all. Since we took the measures we took in early September, repo markets and money markets have been functioning very smoothly. There hasn't been a return to the volatility. They're functioning very normal, really, without, including over year end. We haven't had any return to that. It's pretty clear that the measures that we took directly address the problem. You know when the medicine is working, you can really see, and it seems to be working well here.
And we had a confluence of things happening, just I know at that time, with the quarterly federal taxes due, along with the Treasury auction of debt of upwards of, I think, around $78 billion.